Hello. How are you doing today? So we did this presentation the first time, and when I listened to the back feed, I did not like all the crinkling noise. So I decided to come inside of my computer room and give you the value-added proposition presentation. And so that's going to be from MRW Solutions Group. If you don't know who we are licensed life, health, and wealth management consultants for the great states of Michigan, Ohio, Virginia, South Carolina, Texas, and Arizona. And so, why we put this presentation together today? Well, for two reasons. Number one, I get this question all the time. What do you all do? It's you do Medicare, you do life insurance, you do pet matching accounts. It seemed like you all do a lot of things. And so because of that, it would be great if you could just put it all together, right? And just let us know what you do. And so that way we can look to you and not only refer, recommend, even try and maybe use services for what it is that everything that MRW Solutions Group do. So I always like to talk about it, and I just put up that little disclaimer on the board, basically the states that we are covered in. And we are licensed in as health insurance agents. Okay. Also, want to put up on the board basically how you can contact us. I will be putting this back up there again at the end of the presentation today. You can email us at info@mrwsolutionsgroup.com. We're on the web at mrwsolutionsgroup.com. That's our phone, 734-328-3025. So those are the ways that you can contact us. If you have any questions by the time that you finish listening to this presentation today, if you have any questions, the question that we always like to ask is, are you covered enough? So what is insurance? It provides for protections against life occurrences. And what is the value added proposition? Well, what we say it is basically to be able to provide you life, health, and wealth management solutions that will work for you and your family or others that you love. So we're going to get started with the presentation here shortly, like within the next 30 seconds. I always like to say that when I founded this company, I found it on do more that's required of you. So when we consult with our clients, we sit down and we have consultation appointments with them. And the reason why we do that is because we want to look at every area of their life that they're willing to share. That if we can provide a life, health, or wealth management solution for them to consider, that they can do so. And then we kind of move forward from there. First, we want to find out about our clients, our potential clients, their life, how it is that the products that we offer can enhance it, what it is that is their goals, their life goals, what it is they're looking to do. And then from there, move over to any other next phases. Because if you haven't learned about the client and you're just basically getting a quote, doing a quote, that doesn't really make you a consultant, or better yet, even really honestly give the client the full aspect of service. Again, do more that's required of you. The value added proposition is about life, health, and wealth management solutions. So, like to look at the total package. So, with that, let's get started on our presentation. So there's some keys here because life, health, and wealth management, if you go up to the top, you may not be able to see it because the halves there is the keys to life. Okay, you got your life, you're making sure that you're being financially protected, making sure that you're protected against risks, losses. Also health, making sure that you can go to the doctor, that you can go and take care of your dental issues, take care of your eyeglass issues or eye issues that's related to your vision. Also wealth, I mean, obviously we look at pension plans or 401k plans as an option, but did you also know that you can create your own retirement option, wealth building option with annuities? So we'll talk about that. Also, talk about your pets. They are a part of the family. So, what are ways that you can protect yourself against any losses? Like pets get sick. How can you protect that and protect when you go take your pet to the veterinarian? That you will be able to take care of them, little Fido or Kitty, and that again, you're not losing money that you could be using for other resources to do that. So travel. People are going to travel again. So we're going to talk about basically travel insurance, basically student insurance, and also mission trip insurance. So those are things again that can provide the total life, health, and wealth management solution. So what does life, health, and wealth management solutions consist of? Well, that's the total package. So it includes life insurance, annuities, wealth management, health insurance, Medicare, Medicare supplements, and indemnity product lines. Like I was saying, pet insurance, health matching accounts, deductible replacements. Those are some of the indemnity product lines that we're going to be talking about in today's presentation. All right, explain this, Monica. Explain what you mean, right? So let's do that. So, life insurance. Life insurance can sometimes be called mortgage protection, whole life, universal, term, final expense. Health insurance. There's private health insurance. Yes, it still exists. It still exists. It's called short term. We'll talk more about that type of health insurance shortly. ACA, which is the Affordable Care Act. Small or group health insurance. You got a small business or you got a large business. That can be group health insurance. And Medicare. Speaking of Medicare, Medicare Advantage and supplemental plans, also called Medigap, those plans can definitely save you costs as it relates to your copays. Annuities, living benefit retirement plans. And you control those instead of basically relying on your employer or your small business employer making sure that you are investing for your retirement. And hello, you can actually get a pretty good lump sum of what it is that you are looking for the goal for your retirement inside of an annuity. Deductible replacement. Cash payments for copays and deductibles. We're going to talk more about that. Pet and travel insurance, reimbursement for those visits that Fido or Fufu, the cat, needs to go to the veterinarian. Also, international and domestic travel protection. And I always like to put in here student insurance because with the reopenings that are taking place. You have a student exchange program, students coming over from international to study here. They still have to have some type of health insurance to cover them in that case. That's what student insurance can cover. So we'll get more into that as we keep going. Life insurance. Why is it important? So we're going to talk about whole life, universal, and final expense, and also term. So term policies are for a period of time, 10 to 20 to 30 years. If a benefactor dies within that term, the beneficiaries will receive a death benefit. Additional riders can include return of premium, spouse and or child policy, unemployment waivers, and more. Let me speak about this for a minute. So depending on the rider that comes with your term insurance, I know a lot of people last year, they got laid off. And so they were trying to figure out, okay, how do I manage my bills and things I have to pay? And I'm trying to decrease, obviously, my expenses in order to be able to maintain what's important inside the household. Well, if you had a unemployment waiver with your term insurance, guess what? That would have paid for your premiums for that insurance for up to 6 months. It's available. Return of premium. Well, term insurance only lasts for a certain period of time. Can I get my money back at the end? Yeah, if you got a return or a premium rider on it. And some policies do allow that. I also want to talk about the additional riders that we're going to be discussing at the bottom because they're also available with term insurance, but I'm going to get to that shortly. Whole life insurance, whole life policies last over the life of the benefactor. Premiums paid can build cash value over time of the policy, which can be withdrawn, or if left untouched, can provide additional cash payment over the face value of the policy. The growth of the cash value is tax deferred. Let me go back to that. So let's say in this case, you benefactor have a policy for $150,000. Well, guess what? In that time, you have built some cash value, and that cash value is about $25,000. Can you go and withdraw some of that cash value, maybe $10,000, to help your daughter buy a house? Yes, you can. What happens when you do? Only thing it does is that it decreases the amount of the policy. Now, remember, your face value is still 150,000. You're not borrowing against 150,000. You're borrowing against the cash value in the policy. So again, you built up 50,000. Your total policy face value plus the cash value is going to be worth about $175,000. You're going to take 10,000, give that to your daughter, and basically she go buy a house. Now, do you have to pay that back? Well, I mean, if you want the policy to go back up to 175,000, yes. Otherwise, no. It is money that you have not taken out of the policy. It is just the cash value of the policy. It is over and above the face amount of the policy. So, no, not if you don't prefer. But if you want to make sure that your beneficiaries have not only the face value of the policy, but also any cash value, then yes. Now, the growth of the cash value is tax deferred. So, in other words, will you pay taxes on that cash when you take it out? Yep, you will. Additional riders can include return of premium. Again, if you so prefer, child, it is a lifetime, so just make sure you understand that. So you're returning that premium, you kind of end in the policy. Spouse and child policies, accelerated death benefits, and more. So also critical illness. Now, this is where I'm going to go back to the term insurance. Can you get accelerated death benefits and critical illness benefits with a term policy? Yeah, if you put it on as a rider and that rider is available, yes, it is, depending on certain policies. Now, what does that mean? Okay, critical illness. What do you mean, Monica? Critical illness, like you just got diagnosed with stage 3 or 4 cancer. And so basically, that's a critical illness for you. Is not necessarily terminal, but it's critical, and I need to access some monies in order to help pay for things that's associated with that. Can you access monies in your policy for that purpose? Yes. Is it a percentage? Sure, most of the time it is. Now, what happens with that, and does that decrease the face value of the policy? Yes, it does. So, in other words, basically, in that case, we're going to go back to that $175,000 policy because you built $25,000 worth of cash value. So, you want to withdraw $75,000. So that's definitely going to take away that cash value of $50,000. Plus, you're actually getting into the policy at that point because the face value of the policy was $150,000. What happens to the face value? It goes down $100,000. So it's going to be less, right, for the benefactors, or I might as well say beneficiaries, because the benefactor is you, but the beneficiaries. But can you use that money to take care of critical illness expenses that's relating at that time? Yes. Now, accelerated death benefits. That's usually if you're going to have some type of terminal illness, something that you don't have long to live. Now, in that case, it's a little different. That also applies for term insurance in some cases where they have riders that allow. Can you, I'm going to go back to that 150 face. Now, in that case, we're talking term, so that builds cash value. We're building cash value with the term. I'm sorry. Let's make sure we're being clear. We're building cash value with the whole life insurance policy. We're not with the term. because terms is what they are. They do not build cash value, right? Now, whole life insurance, you have $150,000. That's the face value of the policy. You didn't build up $50,000 worth of cash value. You got diagnosed with a terminal illness. Can you use the policy while you're living in order to pay for things surrounding the terminal illness accelerated death benefit? Yes. Will it decrease the policy that will be paid out? Yes. Can you get up to all of the policy? Yes. You will not have any benefit that will be paid out if you die, but can you actually do it? Yes, you can. You can do that if you have accelerated death benefit on your whole life insurance. Now we're going to go back to term. Remember, term doesn't build cash value, so you only have the face amount of the policy. If you have accelerated death benefit on your term insurance, can you access that? Yes, you can. Now, it's not going to have that additional cash value, but it's going to access the face amount of the policy. That's going to decrease your death benefit that's paid out to your beneficiaries. It can eliminate it depending on how much you take, but these are living benefits. I say that in so many words because a lot of people always think that life insurance doesn't have any living benefits. That's wrong. I'm going to go back to the spouse and child's policies. So you get a policy for your spouse, you're adding that to your term policy or your whole life policy. That's a benefit for your spouse. Your child policies, they can go anywhere from, even on term or whole life, and go from $3,000. Some cases they go up to 25, right? Now your child turns 18. Can they convert that over into a whole life insurance policy for themselves? Yes, if the insurance company allows for that conversion. And guess what? They don't have to go and do any type of medical exams or anything of that nature. It just converts over, and they can add in the first 3 years. They can add to that policy without having to do any additional medical procedures, examinations, etc. Ask questions, yada yada yada. It is basically a convertible policy. So there are a lot of benefits, living benefits to life insurance. I just wanted to explain that as it relates to term and whole life. Now, there's still more. And it's called universal life insurance policies. Those are similar to whole life policies in place for the benefactor's lifetime and permanent, and they are permanent. The differences of how premiums are handled and excess premiums are managed, there are differences. Now, if you wanted to build, in this case, a larger policy, but your income just wasn't at that point, at point when you want to do it. So you want a $500,000 policy, but your income is probably at a $100,000 policy. Well, universal life insurance, again, premium payments can be made at any time in any amount versus a regular schedule. So you may start out smaller because your income is smaller, but then once you increase the income, you start paying more payments to make sure that you're getting up to the point of where it is that you need to be. Again, premiums are handled, excess premiums are different in the way that they're handled, and excess premiums are paid as managed. So I just want to make sure that's clear. Excess premiums, though, are traded on the stock market based on an investment strategy, and the benefactor insurance company agrees upon. So, in other words, can that face value go up and down depending on how much you put in and investments? Could be, could happen. Can it go up? Yep, because it's like an investment. All right, so as such, the cash value of the policy varies based on the mode of investments. So I want to be clear about that because that can be really confusing. You got the face value of the policy of $500,000. You are working your way up for income to $500,000. You have cash value inside of that policy. That cash value excess premiums is basically your investments. It can build or drop basically based on the market. right? Is a universal life insurance policy a manageable policy? If you're young and you want to, look at getting a larger policy because in the future it's going to help cover you and your family, etc. Sure. Does it still have the same benefits? Possibly. Accelerated death benefit, critical illness, spouse policies, child policies, return of premium. It would definitely have, for sure, the first four, which is the accelerated death benefit rider, is an option. Again, options. Basically, critical illness is an option. Child spouse policies and that as an option, depending on if the insurance company allows a waiver of premium. Since you're adjusting those premiums, that's going to be rare inside of a universal life insurance policy. But if they allow it. Now, in the same aspect, now I'm going to flip around. Can I, when I take those accelerated benefits, can it affect, depending on where you're at, okay, terminal illness, particularly accelerated death benefit, the face value of the policy? Yes, definitely can. Critical illness, it can affect, again, the cash value. Sometimes if it depends on if the company allows you to dip down into the face value, it can. It's rare that allows allow for that to happen, but just wanted to explain that the universal life insurance is the most flexible if you want to get a larger policy, but your income's not there yet, and you want to kind of work the way up, right? So again, living benefit are also in the universal life insurance policies. Final expense insurance. Final expense insurance is a whole life insurance policy. When people hear final expense, they think, "Oh my God, that's only for burying me." It's a whole life insurance policy that has a smaller death benefit, which makes the policy affordable. While providing protections of expenses related to death, the policy is permanent. Let me stop right there. So when you sometimes get past a certain age, it can be harder for you to qualify for a whole life policy and a term life policy. Because, I mean, it is rated basically on your health conditions, things that you have done. It can be your driving record, etc. So those can be rated factors inside of some terms and most whole life policies. I'm just saying. So with that, also you can look at your total health, right? Maybe your health is okay, but it's not, it's not great, right? If that's the case, then the best thing to do, and you still want to make sure that you're covered against risk as a value added proposition, is that you want to look at final expense, which is still a whole life insurance policy, but it has a smaller death benefit, right? It still will go to your benefactors. The insurance can still build cash value just like a whole life policy. It still can, because it's a whole life policy in itself. It also can have benefits such as a accelerated death benefit rider. It's an option for dispersing class while the client is alive for a lower death benefit. See what I'm saying? Right? So could you have living benefits even in a final expense insurance policy? Yes, you can. Okay, life insurance. Again, why is it important? Life insurance, depending on the type of policy, can be a means of investment vehicles as it builds some cash value, depending on the policy, what type, which can be withdrawn over the life of the policy. Life insurance is designed to pay off death expenses that are not left upon loved ones. I don't know how many times that, as a consultant and given these value-added propositions, looking at not only the benefactor, but also who they're leaving behind, beneficiaries. See so many people, they loved one dies and they are trying to figure it out, like GoFundMe, borrow, ask every relative, people they know, so they can try and bury the loved one and maybe get a little extra expenses for the expenses that were left behind when the loved one passed. That's what life insurance is for. It's also Yeah, it has living benefits, but we also have to look at, again, making sure that your loved ones that are left behind are not trying to figure out how to figure it out in the event of your death. So, paying off mortgages, cars, other expenses accumulated over time upon death are the primary reasons to consider adding life insurance to an individual's total wealth investment strategy. And yes, life insurance is I'm going to repeat this, life insurance is a wealth investment strategy, and it's a wealth investment building tool, and it is a value added proposition. And if you do not have it, or you know someone that doesn't, then they need to look at their total wellness and financial life, health, and wealth portfolio and consider adding it. Not only for the benefits that are available while they're alive, but also the benefits that are available to their benefactors after they are not. And last, life insurance, depending on the face and cash value in certain policies, can provide additional cash billing options for benefactors named within the policies and their loved ones. So we talked about it. Basically, if you have to withdraw cash because you didn't build cash, whole universal, even final expense. If you got family, it's going to be you and your family that's benefiting from that, right? It's not, yeah. So, okay, benefactors, right? Now, obviously, that, yeah, as we talked about, that can decrease the face value of the policy. But while you're here, you and your benefactors are benefiting from the cash value. If you withdraw for certain reasons, if you have those riders, right? And again, if you're no longer here, is definitely benefiting your loved ones, so they don't have to scramble. Okay, health insurance. Why is it important? Private, ACA, small group, and Medicare. The Affordable Care Act of 2009 changed how individual, private, employer, and group policies are structured. All of the following must be included in all healthcare plans: emergency care, hospitalization, lab testing, maternity care, mental health care, outpatient services, pediatric services, prescription drugs, preventative care, rehabilitative services, and care. Additionally, under ACA, you cannot be denied health insurance due to a pre existing condition, and men and women will pay the same rates for services. Now, I do want to always say that smoking now can rate you higher even on the ACA policy. If you're not getting it through a job and you're getting it for yourself, like you're getting it off the exchange, if you smoke, it can rate you a little bit higher. You can pay a little bit more premium if you smoke than if you not. So I guess if you want to count it, smoking can be a pre-existing condition, but if you stop smoking, then you wouldn't have to worry about that. Now, meanwhile, between time, however, the pre-existing condition can be subject to ratings on the private insurance marketplace. So a lot of people say, what? Didn't ACA end the private insurance marketplace? No, it did not. So let's explain ACA. So you can have, like, the current administration extended the time that people can sign up for ACA. Normally, it would have ended earlier in the year, right? So just say in this case, right, it ended early in the year, the person didn't sign up for it, they have an option. They actually have an option called off exchange. Off exchange ACA is higher cost, but it covers what ACA covers, and you don't have to worry about the pre-existing condition factor. So if you have something like heart disease or high blood pressure, or you're trying to control your weight, etc., diabetes, that is not going to be rated inside of an off exchange ACA plan. You may pay more, but a little bit more, but in the same aspect, it's not going to be rated. In case and flip that around, if you're going to go with a short-term plan, which we're going to be talking about shortly, then that may cause a rating, and it may cause basically, you to pay a little bit more because they're going to count that pre-existing condition. So what did you say, Monica, about short-term plans? That is the alternative if it's off exchange and you're outside of ACA enrollment period, and I got to get a plan, and yeah, I want to keep my costs low. I can't afford off exchange. I got to wait until the next open enrollment or what. It is called short term plans, individual health insurance plans that still exist in the post ACA world. They do. Short term plans, usually low cost, but usually higher deductibles for health insurance. They can be anywhere from 30 days to 6 months, depending on the state. Some states offer a maximum of 36 months. Let me repeat that: 30 days or 36 months. I just want to make sure I was clear. Now, so Texas, one of the states that we are licensed in as MRW Solutions Group, you can get a short term healthcare plan for 36 months. You like that short term healthcare plan, you can keep it for 3 years. In Michigan, meanwhile, you can only get a short-term healthcare plan for 6 months, and then you can do one renewal, which is 6 more months, and that's a year. And after then, you got to go somewhere else, off exchange, on exchange, ACA, or you get hired and you go to a small group health plan. So you go to a small or large group health plan. Or in some cases, maybe you're short terming between you and you're eligible for Medicare. That can be an option. But in Michigan, it is 6 months and 6 months, and that's it. So states vary depending on, again, the state itself. Some states, like Texas, offer a short term healthcare plan eligibility for 36 months. Okay, short term plans cannot, nope, be in a small or large group healthcare plan. So if you're a small business, you're like, hey, I can save some money. Getting my employees a short-term healthcare plan? Nope. You either have to go with a plan that is approved with the essential benefits with ACA, and that is your option. Because you cannot put the employees in a short or large group healthcare plan. Now, can the employees themselves do it? Like themselves? Yeah, but you also have to look at with ACA, if you got a minimum number of employees, you're required to provide benefits. So if it's just you and two other people, that may be different. But in the same aspect, if it's you and 10 people, you fall up under the ACA rules. And also definitely 20. If it's you and 20 people, you definitely do. Also, one thing that you want to look at is that there can be some tax credits by you having employees shop the exchange and you're giving them a stipend. Those are individual situations that we can talk about on a one-on-one basis if you are looking at that. Okay, here's what short-term health care plans do not cover. They are not required to cover ACA essential benefits. Those are the ones that we named off. Plus, they don't cover pre-existing conditions. They don't count as minimum essential coverage either. They don't provide essential health benefits of ACA. They primarily act as catastrophic coverage. Limited selection of doctors. And you can't get ACA cost assistance with a short-term health plan, and it may impact your COBRA coverage if you own it. So, what reason would I get it? I pretty much explained the reasons why you would get it. Now, you can get some benefits, like see your doctor 8 times a year, basically emergency room visits up to this amount, maximum benefits up to a certain amount. It's kind of like taking post ACA and going back to that type of system. That's really how short-term benefits work. Some are a bit better than catastrophic coverage, honestly. But are you going to end up getting the same benefits that you're going to get with an ACA off exchange or on exchange plan? Some you will have to add on. And is it going to be exactly the same? No. It's not. So again, is an option for people if they need it. And again, if looking at total value proposition, sometimes you have to look at, yep, ACA is an option, but also look at short-term plans if that's something that's needed for you and your family. Medicare. Okay, so if we are all lucky to live, and the ones that are receiving that Medicare now, to the age of 65 or over, and or we are disabled for 24 months and we receive SSID, we qualify for Medicare. And so you hear a lot of people say, oh, yeah, Medicare for all. Well, great. But do you really know what Medicare covers and what it don't and how it works? A lot of people say that and they have no clue what Medicare actually does. Well, we're going to talk about it. So first we're going to talk about what's the projected change in Medicare enrollment for like 2000, well, the 2000s all the way up to 2050. So that's like 50 years. So, okay. So if we go back and we look, I just want to go to the blue line. That's Medicare enrollment in the millions. And then the teal, if you want to go there, box is the annual average annual growth in enrollment. Okay. So, starting at the year 2000, it was 39.7 million people in Medicare. And then it kind of itched up a little bit by 2010 to 47.7 million people in Medicare. As you can see, the biggest jump was from 2010 to 2020. First of all, it jumped. Growth was 3.0% during that time. That's 10 years. People wise, you got it was huge. You're looking at somewhere. I'm just doing a rough math in my head, so forgive me. Somewhere in the area of about 18, 19 million people was in Medicare between those 10 years. So now we got to look at 2020, 2030, 2.4% growth by the end of 2030, they're projecting 87.5 million people will be in Medicare. So this 10 years is a big jump too. It gets a little slower at 2030, probably because you're looking at, right? You had the baby boomer generation, and then you had Generation X, which is going to be coming in a little bit by the time 2030 gets here, a little bit if they're on the latter half of Generation X, I should say the first part of Generation X. And then basically you're going to have Generation X in between 2030 and 2040, right? For sure, that they're projecting give or take about 7 million growth. 88.9%. I'm sorry, let me correct that. 88.9 million people. And by 2050, it's going to be 92.4 million people in Medicare. Okay. The growth is smaller, probably because, not as many people are going to be. You still have some. Pretty much the bulk at that point of Generation X, which had a lower growth rate than basically the baby boomer generation. And you might be getting into a little bit of that what's called generation millennials. Yeah, sorry, about to get them wrong. Millennials might be crossing in the upper half of millennials by the time we get through here. Okay, so Medicare population is projected to increase by 54 million beneficiaries today to over 80 million beneficiaries by 2030 as the baby boom generation ages into Medicare. And again, Generation X begins the first part of Generation X. All right. Between 2010 and 2030, the older population, persons 65 and over, as a share of population jumped from 13% to 20%, doubling the share from 1970. Demographic population changes also affect the number of Medicare beneficiaries that are entitled to Medicare as a basis of disability through the Social Security Disability SSI program. Currently, individuals under the age of 65 who are entitled to SSID payments are eligible for Medicare for 24 months after their disability begins. So, this is something a lot of people don't know. If you have been approved for SSID and you have been getting SSID for 24 months or less, so you have been disabled for 24 months during the time that you were applying for SSID, once you get to month 25, you're eligible for Medicare. SSID, and starting in 1954 and over the past 3 decades, the number of SSID recipients has grown significantly from 2.9 million in 1980 to 9 million in 2013. You can probably add another 4 million to that now. So we could be easily hidden somewhere around 11 to 12, maybe even 14 million. A part of this growth of SSID enrollment is due to demographic changes. The rates of disabilities are highest for people 55 to 64. So again, value added proposition. I just want to talk about this for a minute. You hear people say Medicare for all. You also hear some people say, let's take the Medicare age down to 50. Well, don't know if that either one of those are going to happen, but right now, the value added proposition with Medicare for people that are aging in, like now, and people that will be aging in within the next, give or take, 10, maybe pushing that a little bit, 12 years, is that Medicare needs to be protected for them because, and this is why, because they will be accessing those benefits. And then you got to think of the fact that people with disabilities, they could go up. So I'm not here to, make a political speech or argument today. Not at all. I'm here basically to talk about what's the value proposition. And when as it relates to Medicare, it is a value proposition for retiree age of over 65 and over, and disable insurance for potential benefactors today. Okay, so what does Medicare consist of? Like, Monica, what is it? All right, let's talk about it. All right, so we got hospital coverage, inpatient care in hospitals. That's what that means. That means if you're in the hospital, including critical access and long term care hospitals. All right. That's like rehab, nursing homes in some limited cases, right? Medical coverage, doctor services, and outpatient care when medically necessary. Okay. So if I go and I have to go to my PCP, and then I got to go to a dermatologist, and then I got to go to the urologist, is that all medical coverage if I'm not in the hospital? Yes. What does that mean, Monica? That means that is an 80-20 benefit. So Medicare pays 80, you're expected to pay 20. And that is the way the Part B works. Now, what happens if I'm in a hospital? Well, you do have a copay and a co-insurance if you're in the hospital. So how does that work, right? So then basically you pay for a certain number of days while you're in the hospital. It's like $350 to $51 up to 7 days. After that, that's when your coverage goes to 100%. And then there's once you get to a certain number of days, you're coming back again past day 61, and you're paying for some days again, like $700 and so dollars, until you get to, and you're not paying for all of them, but you're paying for a book. And then you get to day 90. What happens to day 90? Well, then you're in your lifetime bucket, right? So then basically from day 91 till 120, you have days you can use. But if you use them all up, you don't get them back. So basically, the 0 through 91 you will have every year. The 91 through 120, depending on how you use it, you may not get it back. Most of that time, they're going to try and scale you down somehow to some type of home care or some type of rehab or some type of basically maybe even nursing home care, which falls up under another aspect of state insurance, which I'm not here to get deep into that one today. But basically, that's kind of like how that Part A works. So there's a copayment and there is a deductible depending on the number of days that you are in the hospital. Medicare Advantage plans. Okay, well, Medicare Advantage plans, Part C, includes all of Part A, Part B, plus as well extra benefits. Sometimes that Medicare Advantage plan can reduce that money that you paid from days 1 through 7. Sometimes it can eliminate it depending on what type of Medicare Advantage plan you have. Sometimes it can include Part D, which is prescription drug coverage. Sometimes it can include a stipend for dental and vision, because we haven't talked about that. Dental and vision, that's not Medicare unless you are having something related to a medical procedure related to dental and vision. So let me be clear. So if something happened to your jaw and basically something happened to your teeth as a result, that may be covered under Medicare. But if you got to go medical Part B, but if you have to go and basically go get your teeth cleaned, get extraction, that's not related to a medical condition, you got to pay for that. Or if you got to go get some glasses, you got to pay for that. So Medicare Advantage plans, basically, some of them give you a stipend to help pay for dental and vision related occurrences. Prescription drug coverage. So let's go back in there. That's not a part of a Medicare Advantage plan. Remember, we talked about Part A and Part B, right? Part A and B in itself does not include Part D. You have to get that extra. And the reason why is because basically this prescription drug coverage Part D is separate from A and B. I know you guys see in between, just act like it's not here. Basically, so you got Part A, B, D, right? So if you get Part A and Part B and you just don't want a Medicare Advantage plan, we'll talk about supplements shortly, then you really want to kind of get Part D, because if not, then what happens is that you enrolled into it late, and so you can pay a penalty for that. So yeah. So I just wanted to talk about that. Most of the time it is included inside of a Medicare Advantage plan. All right. Oh, supplements. We're going to be talking about that shortly. Medicare supplements, Medigap plans. Okay, so going back to Part D again. I know you see these letters up here and they're very repetitive, but these letters are different as it relates to Medigap or Medicare supplemental plans. All right, so I know they look the same, but they have different meanings. So with that, I'm going back. So just say I got my Part A, Part B, and Part D. Okay, great. What about my dental and vision? No, unless you have a Medigap plan that pays some type of stipend for that, you actually have to purchase that separately. So let's get into Medigap and Medicare supplements. Again, total body, we're doing the whole thing. So we got the annuities, and now we're looking at the insurance, and getting to that point. You had your annuity, you're about to get ready to go and get that money out of there. Total value proposition. Now you're about to get ready to go to Medicare. What do I do? Right? What do I do? All right. So you were looking at a Medicare supplement Medigap plan. As you can see, you got A, B, C, D, E, F. Oh, not E. A, B, C, D, F, G, K, L, M, N. So we're going to see, look at these two. You see those two? F and G? Yep. They look great, don't they? Only problems is that F and G actually do not exist for anyone going into Medicare past January 1st, 2020. The reason why, because they eliminated those plans. And the reason why is because they eliminated the Part B excess charges that those plans covered. So basically, if you wanted to sign up for F and G, you cannot anymore. So let's go ahead and look at A, B, C, D, K, L, M, N. So I'm going to talk about the benefits because you can see, and the best way to look at it is before F, after G, right? So those letters. So you have basically Medicare Part A coinsurance and hospital costs up to additional 365 days after Medicare benefits are used. Remember, I talked about it. So you get that lifetime benefit bucket, right? What do you do if you use it all? Well, if you use it all, the Medigap plan will help pay that Part A coinsurance and hospital costs for additional 365 days after Medicare benefits use, or you're going to use part of it, and same thing. All right, so Medicare Part B coinsurance copayments, as you can see, D's hundreds, F through N, depending on the plan. Right. So you do have coinsurance and copayments with Part B, which is your doctor's insurance, as I like to call it. Depending on what Medicare supplemental plan, it can basically help pay for that, pay for them copays, or pay part of it. First 3 pints of blood. Medicare does not pay for the first pints of blood if you have to have a transfusion, unless you have some type of gap supplemental or Advantage plan that pays for that. So then basically you can look A through D, and then K through N. Hospice care or coinsurance copayment, which is a part of Part A. There is a copayment and coinsurance for hospice care if you have to use it. Medigap plans A through D cover that, and K through N covers either 100 through 50%, depending on the plan. Skilled nursing facility care coinsurance. Okay, A and B just don't cover it. You do get a part of it in B and D, a part as in 100%, and then K through N depends on the plan, right? And please make sure that you understand, basically you want to have that, because otherwise, if you don't have a gap, supplement, or Advantage, you will be paying that coinsurance for skilled nurse facility care. Part A deductible, as you can see, A through D, and then K through N, depending on which one you choose. Part B deductible. Okay, remember that? K, F, that don't count anymore. C is basically very rare. So most of the time you will be paying a Part B deductible. We don't even want to talk about SSI charges for an emergency. As you can see, CD, M, N. How does that work? That's 80/20, and the maximum benefits is $50,000. So if you're doing extended foreign travel and you don't know, you might want to get travel insurance in order to go with that, just to make sure, again, value-added proposition, that you're protecting yourself while you're overseas. Things are beginning to or domestically, things are beginning to open. Well, if it's domestically, you're going to still be covered under Medicare. But if you travel to somewhere that's not in America, then you're going to have that foreign travel emergency part. And if you do with Medicare and Medigap plans, this is where you are, right? If you have if that's an 80/20, if you have a Medicare Advantage plan and it doesn't cover any travel, foreign travel, most don't. You can always get a travel accident policy or a travel insurance policy that can, and they're really affordable. But in the same aspect, as things begin to open back up, people may want to travel overseas. And if they have a Medicare supplement or Medigap plan and it falls within CD or MN, it will be 80/20 with a maximum $50,000 benefit. And there are some out-of-pocket limits on K and L. Okay. Annuities. The living retirement plan annuities. Let's explain how they work. Annuity is a contract between you and your insurance company that requires insurance to let's go back. Annuity is a contract between you and your insurance company that requires the insurer to make payments to you either immediately or in the future. You buy annuity by making a single payment or a series payment. I got $25,000. I want to buy annuity. Okay. Or you can make a series of payments. Similarly, your payout may come as either one lump sum payment, if you choose, or a series of payments over time. Death benefits. If you die before starting to receive your payments, the person you name as your beneficiary will receive a specific payment. Again, how you name it in the annuity. One lump sum or as payments over time. Tax deferred growth. You may pay no taxes on the income and investment gains on your annuity until you withdraw the money. Once you withdraw the money, then you can have some tax liability. Fixed annuities, variable annuities, index annuities. How does these work? Fixed annuity. The insurance company promised to pay you a minimum rate of interest and a fixed amount of periodic payments. Fixed annuities are regulated by insurance state commissioners. Variable annuities. The insurance company allows you to direct your annuity payments to different investment options. Could be stock market, could be mutual funds, could be pork barrels, funds. I mean, you have the option, right? You have options. If the insurance company says, here's options, and you can pick them. Your payout will vary depending on how much you put in, the rate of return of your investments and expenses. The Security and Exchange Commission regulates variable annuities. Index annuity. What that means is that this annuity combines the features of securities and insurance products. So it's like kind of both. The insurance company credits you with a return that is based on the stock market index, such as Standard & Poor 500 index. Index annuities are regulated by the state insurance commissioners. So let's look at this example for Joe, right? This is Joe, and Joe basically was age 50, and he needed to accumulate some money for annuity for his retirement plan. He put in $100,000 for the premium. He did that because he had that money. He could have built up to $100,000 too. That's also an accumulation phase. He got 3% return on that $100,000 that he put in. So by the time he turned 65, it was $155,800. Payout 65. So basically, he's getting paid out over 20 years. The average annual income is going to be $10,470. Remember, when he pays out, that's when it's taxable. So only $5,470 are taxable. Boop, boop, annual income, boop, boop. All right. Deductible replacement insurance cash payments for copays and deductibles. Okay, deductible replacement insurance comes in many forms, including this form, which is a HMA, a health matching account. The HMA is a health matching account, is the ultimate medical benefit savings account available both to save money on out-of-pocket expenses, medical expenses, and can decrease the primary health insurance plan's deductibles by saving 40% or more on monthly premiums over time, right? Because you can pay monthly premiums with your health matching accounts if you like. This HMA awards its owners up to 2-to-1 in medical benefits or more, depending on the level of the HMA you choose, for every dollar that's contributed in a HMA account balance. As the program progresses, allowing to decrease overall health insurance deductibles, copays, lower monthly premiums, as it's designed to cover out-of-pocket medical cost obligations for deductible medical expenses. And other deductible replacement insurance options include basically critical illness insurance that can pay you or whoever it is. If you got on your wife, it'll be your wife. Lump sum if you're diagnosed with a specific illness such as life-threatening cancer, heart attack, kidney failure, stroke, coma, and more. Lump sum cash benefits insurance. This is also called hospital indemnity for accidents, hospitalization, serious illnesses that can help pay a medical high plan deductible. So just say you're in a hospital and it's going to cost you by your medical plan. You got the initial $500 you got to pay because you got admitted in the hospital, and then you have to pay 10% on top of the 1090. So you got 90% they pay, 10% you pay. Well, guess what? If you have a hospital indemnity plan, they can pay you amount. Just say in this case you got admitted to the hospital, they pay you back $400, and then basically you stay in the hospital for 3 days. They pay you a lump sum cash benefit of $350. That comes to you in a form of check. You can go and help pay those deductibles and copays as related to your hospitalization or serious illness, like if it's in a cancer policy, etc. Accident medical insurance. After deductible, the benefits may cover medical expenses resulting from any covered accident. All right. Last but not least, we're almost at the end. Reimbursements for vets visits, domestic, international travel protection, dental, and vision. Yeah, so dental benefits. A lot of people always say, "Why don't you negotiate my prices with my dentist so I can go to U of M medical school or medical school in your area and have students work on me?" There's nothing wrong with that, but in the same aspect, it's always good to have dental benefits because, again, if you got a family, well, you got kids. If you're young, hey, you gotta get your teeth clean. You may have to get some other work done that's cost you money. Yeah, you can negotiate, but you can even save more money with dental benefits. And of course, you may have to get a root canal. Ooh, they hurt. You may have to get some teeth extracted. That's what dental benefits help pay for, lowers your costs. This is Jane and Fido right here. Fido, because Jane cared about Fido so much, she went and got what's called a pet matching account. So when Jane takes Fido to the vet, right, and Fido has to have some work done because you know what? He broke his paw. Like might as well say the palm of his paw. He went out there. Unfortunately, somebody did something, left some stuff out there. He cut his paw. He broke it. Right. Fido's got to go to the vet, get taken care of. And so it's going to cost Jane about $700 to help repair Fido's paw. Jane, like, where am I getting the $700 from? Well, guess what, Jane? Remember, I got pet matching accounts. Oh my goodness, I didn't put in this money in this account. So Jane basically can use her pet matching account in order to help pay for Fido's medical care. Boop. And that's awesome. Travel insurance. I talked about students. Obviously, they may be coming back, foreign exchange students. That is considered student insurance if they're coming from overseas and they need to have insurance to cover any risks against them, like medical. Travel insurance also is insurance. Again, talked about that already. Traveling, domestic or international, you might want some travel insurance. Also, basically, mission trips. As we begin to open that up, people may be going on mission trips. Travel insurance can help protect any medical risks that you have as it relates to care when you're doing those mission trips. Eyeglass insurance, pretty much. Vision insurance, glasses, glaucoma, LASIK, all that would be included inside of a vision insurance plan. These are equally important life expenses that can provide for financial protection of out-of-pocket expenses that can provide peace of mind and creates that value-added proposition for your total financial portfolio as it relates to life, health, and wealth. Normally, at this point in the presentation, we would do questions and answers. But of course, we're doing a presentation, so it's probably hard to ask questions and do and all that, So that's not a problem. If you do have questions, again, we are licensed and the consult in Michigan, Ohio, Virginia, South Carolina, Texas, and Arizona. And you can contact us. It's going to be coming up in shortly. Email info at MRW Solutions Group, web mrwsolutionsgroup.com, phone 734-328-3025. And I wanted to stop the presentation for a minute. I wanted to show you our website real quick. So I'm going to bring this up. And I'm going to take the presentation temporarily down. Just temporarily. Okay. And then I am going to pull up our website. And the reason why is because I wanted to familiarize you with it in case you may want to go there and look at things. So I'm going to stop presenting. And then I'm going to represent. Give me just a second. Okay, going back to halves, and we're going to put this up and put that down. So this is the website for MRW Solutions Group. I'm just going to pull this over here because it'll be easier for me to navigate it. Insurance made simple. That's what we do. That's why we consult. That's what we do. You already know where we're at lines through, right? And this is about, are you covered enough? We ask that all the time. And this is what that means. We talked about the product lines that we can consult you on and that are available. So we won't go back through that. These are some of the insurance partners that we have. That's me. And then again, I talked about our core business model is summarizing the quote of do more than what is required of you for each of our clientele. Value added proposition says do more that's required of you, which is us, for each of you, which is our clientele and future clientele. Again, we are one-stop life, wealth, and health insurance agency, broker with experience managing a wide range of risks and exposures, and make sure that you receive the exceptional coverage that you want. So I'm going to go. There's also reviews from our clients. Please look at those. We love people. Look at those. All right. So I'm going to go up. So, Monica, you know what? I just want to quote. Well, we always say let's consult because it doesn't cost you anything. And plus, that way we can look at, again, value added proposition, total life, health, and wealth solution. That basically says for me, and also hopefully for you, hey, let's talk about it. Make sure that we're getting everything that we need. All the questions are answered, options are presented, and then basically from there, we don't even begin to look forward to going beyond that until you are secure with like, okay, Monica, yeah, you set up this plan for me. I like it. Let's move over to the next stage. Okay, so here. In this case, person wants a life insurance appointment. They can pick their time. Yeah. And then from there, they hit next. They're going to receive a Zoom link for the appointment. We're going to meet them there. If for some reason they don't do Zoom, because hey, some of our clients do not do Zoom, that's okay. Still fill out this information here. And let's see, I'm going to choose 7:30 so you can see what you need to fill out. Still fill out this information here. We don't ask for like anything to consult but name, email, phone number, and the message. We're not looking for the rest of the information. We are basically just talking to you, so we don't need all that. So basically fill out this here, hit request a book, get this. I'm going to get a notification. We're going to get a notification. If you say in the message, I don't do Zoom, well, then we're going to basically email you, let you know that we're going to call you at such and such a time, which is the time that you selected, and then we're going to talk on the phone about it. Okay, so I wanted to go back up and go into Medicare 101 education. This is something that we pride ourselves in, making sure that people who are 65 or older, and as well as those with certain health conditions, understand what the Medicare program provides for them as beneficiaries, benefactors of the program, right? We also do Medicare Scholar related, turning 65 and above Medicare events. Those are events for people designed turning 65 in the year 2021 or older, and they just want to know more about the Medicare program. We gave a brief overview today. It is very more intensive with our Medicare 101 education seminars. We do basically also do events where we go out to people, and like Saline Farmers Market and Dearborn Farmers Artist Market, we're going to be doing events up until October there. So pick a day. If you're local, come on out. If you're not local, that's fine. Just go on our Medicare 101 education, book online page, and you can hit a Medicare supplemental Medicare appointment right there, and we can still give the same presentation to you. If you just want a quote, we do have that option, book a quote. You find out more, why choose us, contact. Also, if you one thing on that Medicare 101 education page, I like to let people know, I think it's actually on my first page. Sorry. You can always find out like you can go and look at the seminars also here. Boop. Here you go. And these are You Covered Enough videos. They also talk about, you click on a video, and one of them I know for sure is our Medicare 101 education seminar. So that's the website, Insurance Made Simple. This should not be difficult. We want to make it as simple as possible for you for the value added proposition, because it's important to your life, health, and wealth, and also your families. There's this cute family right here, right? They're cute. And that family, right? All families count. All right. So we're going to basically put this back up, and then we'll end the presentation for today and the seminar, and without the crinkles. Oh my gosh, I'm so happy they're gone. All right. So with that, let me stop presenting. And then we're going to start presenting one more time real quick. Okay, so how can you reach us? Well, okay. The first thing I always said, life, health, and wealth value proposition. Are you covered enough? Are you not sure? Well, if you're not sure, sit down, have a consultation appointment with us, and we will talk with you about it. But how can you reach us? Well, we can go and have a chat. MRW Solutions Group Consultant Services are no charge. Reach out to us at MRW Solutions Group by email, by phone, by website that we just showed you. Hours are, as they say here. We also do evenings by appointment. So we look forward. I mean, I'll just be honest. I mean, we look forward to answering your questions. If you have questions, you're not sure Monica, you presented us with a lot of information. Yes, right? And so we want to talk more about things that maybe our family needs in order to enhance our value added proposition as relates to life, health, and wealth. Well, that's great. We would love to talk with you about that. So get in touch with us, right? Get in touch with us. And I'm going to put this information back up there real quick. And we'll go back to the notifiers. And from there, we will have that consultant sit down, Zoom, phone consultation with you. So thank you so much for tuning in to this. Some people may have saw it twice because, again, we had to go back and fix the issues with the crackling. It was too much. And we appreciate your time today. We appreciate you coming into the seminar. And so with that, just again, let us, if you are not do anything this weekend or you're not busy, catch us at the Saline Farmers Market. We're going to be there that Saturday from 8 to 12. It's a Medicare education event, but if you got questions about any of the other things that we offer, we'll be more than happy to answer your questions. Right? So, alrighty. Thanks for tuning in. I'm going to end this presentation now, and you have a great and lovely day, lovely week, and a beautiful summer, and happy June.